Well, guys, what is up? I hope you are doing well. Pete DiCarlo here doing our S&P 500 and total market recap. I started doing these a couple of days ago. I think I'm going to plan to continue to do these every single day. If you enjoy them, please let me know in the comment section. Not only do content creators say that because it does help to push the algorithm, but most of all, it's because I want to know what type of content you guys want to see, right? I don't make this content for myself. I make this because I like helping you guys, and if you guys let me know the content you want to see, it makes my job easier, makes the channel better, and most of all, it gives you guys a better product. So what we're going to do, we're going to talk about the S&P 500, we're going to go over the NASDAQ, we're going to go over the Dow, the Russell 2000, and we're going to go over the biggest news that we have today, which was the Fed meeting and the minutes. So hit the like button, subscribe to this channel as always. Go check out the Discord, link is in the description. We have over 3,000 free members. I love to hang out with you guys over there. You guys get tons of free content like free courses, free live streams, access to all my free long-term investments as well. You also get access to one of the best unusual options and technical analysis bots out there. This is a $200 a month bot that we pay for so you guys can get it completely for free. Now, let's take a look at the S&P 500. Earlier this morning, we had a big rejection. We were holding down here at $460, and I was telling the private mentorship group that if we were underneath this 22 EMA and we closed below this, that we would easily see a drop back down to 449. And we knew that we had the Fed meeting today. Depending upon how that went, was probably going to say if the Santa rally was still on, or if we were going to take a bigger fade down to 450 and probably close the year a little rough. Fed meeting was great, right? The market was really happy with the way that it came out. And if we look at this 1 minute chart on SPY, you can see basically what ended up happening right here around 2:15 is when the Fed meeting minutes came out. We were trading at 460 and we had an insane 2% rip within the last hour and 45 minutes of the market open, and really strong close. Now let's go through the major takeaways from this. So the Fed will aggressively dial back on its bond buying, sees a 3-rate hike next year. Federal Reserve provided multiple indications that its run of ultra-easy policy since the beginning of this pandemic is finally coming to a close, making an aggressive policy moves in response to rising inflation. For one, central bank said it will accelerate its reduction of monthly bond-backed purchases. They do end up buying junk bonds, which is a part of it. And what I kind of want to go over quickly, which I can do an entire video on like inflation and rate hikes and whatnot, and I talked about this on the live stream with my private mentorship group today, but see, when it comes to inflation and to the economy, basically there are two states for the Federal Reserve to be in. One is to be hawkish, which is when they're raising rates, combating inflation, and the other is to be dovish. Dovish is when kind of what we've seen over the past 2 years, where they stimulate money into the economy, they put money into the economy, they buy back bonds, they end up actually lowering rates, and when they lower rates, what it does is it makes people go out and borrow more money. When people borrow money, they go and buy more product, they buy more goods. But what happens is when they do this, and there's a lot of money in the market, rates are low, there's a ton of demand for things, but supply is very limited, what happens is we get inflation. And the only way to combat inflation is to, raise rates once again. Now, raising rates scares some people. And a lot of people thought that if they said that they were going to start to raise rates again, that we'd see the market drop, especially in an aggressive manner like 3 rate hikes next year. But we didn't, because we know that if we don't raise rates, we're going to see inflation creep up to like 8, 9, 10%, which is like terrible. So that's a very good sign, looking like we're going to help to combat inflation by going ahead and raising rates. At this point here, you can see technically S&P 500 had an amazing day. Big resistance here at 472. Looking like we're going to try to push through this here in the next couple of days. And I do think that we will probably end up closing the year on the S&P 500 around 475, maybe even 480, which would be a stretch, but it's definitely possible. So all of that is looking good. If we go through and we take a look at the NASDAQ, very good bounce today, good push up, RSI putting up, MACD's about to cross, the Dow bouncing off, and the NASDAQ was really getting hit this morning, but the Dow, great push off of this 11 and 22 EMA, looking like we should close the year up at 36,400. And most of all, the Russell 2000, IWM was down massive today, down to 212. Good bounce, looking good. And it's looking like the Russell can get back up to 224. So far, market's looking good, looking like everything is going to recover. We saw, travel was down pretty big today and yesterday. Actually, most of them ended up flat today. Affirm, which is a position I have right now, actually performing really well, was down about 6% today. So big flip-flop within the market today, but things are looking good, guys. I'll keep you posted. Let me know what you think. Hit the like button, subscribe, and I will see you next time. Peace.